All right, welcome to our midday watch list build. And we're going to try and do this 5 days a week. We may not always have a swing trade list to build in the middle of the day. Certainly, the market's been choppy. It's very hard to find good swing trades, but most of the time we can still find them. But there will be a day where we might not find any. And the way I do it, I literally just go through and look at what's moving with the most volume today, and then I can just pop open a chart on those things as I see them pop up in that volume scanner and kind of get a good read on the chart. And well, my job, I guess, will be to analyze that chart for a longer term swing trade, which can be anywhere from overnight to a couple weeks, sometimes a month, depending on what we're looking at and how it's playing out. And we can find some swing trade builds from that. So to begin, I'm going to recap a couple of the ones we had from yesterday, or all three of the ones we had from yesterday, and see where we're at, see what we can expect from those, and go from there. So here we have AMD. Our 5-minute chart came down. Let me see. I don't remember if I put an alert out on that, other than the fact I did record it for a swing trade watch. I did have some target in range on that one, and we were looking at this control bar here. So our price target was 90.70-ish. I'll have to go look at that recording to be sure. Just this control bar from the 29th here. So would be July 29th. And we also looked back at this gap close, and we definitely met that target for an overnight bear swing. I was a little skeptical on the entry yesterday because yesterday we were looking at an accumulation of a nice big flag. But look a little further left. It's been kind of flat and accumulating for a while. That flag was pretty much nullified by this, but it became a point where it could break over on that bearish move that was expected. Certainly just about nailed that target. And if you look a little bit further out, a longer time frame here, we have the makings of a 30-minute bear flag here that can break over and meet that target once again. And it has extended to that target already today. So kind of keep your eyes out for that. We could remain bearish on that and follow through the rest of this range down to the next target, which is about 87, between 87, 88, somewhere in that neighborhood. Just basically look left for your control range and figure out where the trend breaks. And then also, you always want to look at your daily chart and just kind of verify what those daily candles are telling you. You can turn the noise off and see it a little better. You can see the gap pretty much in play. The next control zone, we could certainly get down just a little bit below 88 in this control bar alone. And that runs exactly this pullback point from the previous measured move on the bullish trend. So pretty good odds of nailing that target. It's a fairly easy chart to trade, usually with AMD. Going back to Alcoa here, we had that news break yesterday where we had the situation where the smelters were shutting down. The energy was a little too expensive for them to continue operating profitably. That certainly made a nice measured move yesterday to the bull side. They had a nice early run. We were at angular resistance, accumulated under it, and broke out into a beautiful measured move. That was a pretty easy bull target. I have some targets higher, and it can certainly get into that range. But if you remember right, the trade plan was look for a break above $54. Didn't quite break that $54 mark, right? So that kind of nullifies our swing trade. Doesn't mean we can't day trade it. So there's plenty of range to day trade in this whole measured move upper half. We could pull back to it even down to 52.30. The idea is if you're going to swing trade this overnight or longer, you're going to look for that break above 54. That is a critical resistance point. It's right at the top of a channel, if you will, here. And you can see that if it gets above 54, it's got range, 55, 65, 57, and some change, all later and all predicted by longer term chart time frames. And you can see, this was, even though it was a crash channel or just a completely descending trend, it had a little bit of an accumulation in here, and it was a measured move in itself. Pretty easy to spot those when you know what to look for. So we get range control in that area. We could easily get a breakout above that 57 change target and run this entire bar all the way up to 61 $61, $62, somewhere in that range as well. So definitely lots of room to move around in that range. And you kind of get the idea that there's a swing trade opportunity here to go and retrace those ranges. So that's the whole point. And if you keep it that simple, you really don't need many indicators to see these. You could literally look for these as simply as pulling up a daily chart, turn off all your noise. Heck, you could even go so far as to turn off all your indicators. Really don't need them at that point. And look at the candles. They're going to tell you exactly what you need to know. Yeah, resistance here, pretty easy. Gap range, nice. Target low, 55, 50, maybe 56. That whole range is possible. Okay, easy peasy. Descending channel, we know they like to break into a point where they retrace, and typically they love to retrace about 50% of that channel. We could get some range up to 66, 67 bucks. That's possible. Definitely. We'll ride the momentum when we get there. The idea is finding a swing trade so you can make an entry where you buy low, sell high, rinse, repeat. And you can do this any way you want. You can do it with option spreads. You can do it with buying shares, selling shares, however you want to do it. Selling put credit spreads, a million ways to skin this cat. That's the whole point, is making sure that we find you guys a decent trade setup and we get the word out. Make it, I don't know why it defaults to such a tall secondary chart, whatever. Let me turn some noise back on too, because we're going to point out a couple things. Okay. Apple today, to kind of review, we were looking for a rejection at 168. We've rejected it yet again today. We've also had some day trading action on this guy. So overnight, by the time I was getting this out yesterday, I was looking for a rejection of 168. I had some targets down a little bit lower than 166. In fact, on that alert, I was probably looking, oh boy, let me see if I can pull that up. Let's see, Apple, I was looking for control down here at about 165. I missed that by $1.25, but we were still pretty bearish. It was still pretty easy to see that it was bearish. Able to line out a couple things here where we had this range expansion today. We just basically run a trend line, run an extension off the other trend line, and bam, we can get, actually, that's a bearish wolf wave right there. I'll explain those later. Wolf waves are great. So peak 1, base 1, peak 2, base 2. And you just run a line from peak to base, gives you a target. Well, we had range expansion in that line, and we had a break. So we had a bullish break of angular resistance here. And this can be adjusted a little bit. And we had a measured move to boot. So we had this part of the channel, bullish run, accumulation, measured move, target met. Look at that. Missed that 168 by 2 pennies, rejected. The idea is you can get a bearish entry here. If it threatens to retrace that 168, cut your loss and wait for the setup to complete. The other idea is run a bearish trade. It's a good swing trade. Looking at retracement, very likely to come down and hit that 50% level, at least a 33% level of retracement, down from the top. And we've got lots of pivot points involved in that. Pretty easy trade. All right, that's the review of the stuff from yesterday. Now I'm looking at Bank of America. Kind of a similar situation, bigger control bars. We're looking for rejection. This guy here at about 35 bucks. We can see it certainly spike up to that before the day is out and reject. The idea is looking at a measured move. So we got a bear trend, accumulation, and a bear trend, measured move. Can set our target to about $33. We got control zones involved in that, where we've got these two bars here that we split. So of course we can expect a pause about $34. Base of that range, easy to spot. $348, $33 base range, accumulation. All the dope is there. This is likely to be bearish. However, if it does not break that 2-hour 200 period with some force, it can bounce up bullish again and run to that 35.50 area. Definitely keep an eye out for that. As far as the daily chart goes, we had a nice descending trend here. We just about met that 50% retracement right here. That was back in the 16th there. And now we're rolling back. So we're expected to make a bearish move back to previous support, which is this whole accumulation zone here, about 33 to 33.50, somewhere in there. And if we extend that into a breakover and a bearish trend, we can likely retrace these two bars here. So we get a break of that support, 33. Next target, 32.20. Extension target, 30.80. Easy bearish trade. Doesn't mean that it can't bounce off that support zone and run back up to range. I mean, essentially, this channel kind of did the similar thing, just a much smaller time frame here. That is a channel. And you can see sometimes those will run right back to a 50% retracement. So essentially, weigh your risk out, make sure you know where your stops are going to be if it does revert to a bullish move. But for now, it's looking like a pretty decent bearish swing trade. All right. There was a couple others I was looking at. Let me see if I can pull those up while I'm muddling through my list of volume movers here. Tesla's kind of got some interest to it, but be advised, that's making a 3-to-1 split tomorrow. I wouldn't necessarily recommend getting into a position, especially with options ahead of a split like that. But it could at least give us something to watch. On a daily, if you consider this our descending trend, we've met exactly a 50% channel retracement right there, and it's accumulating into contracting range or a flag pattern or a wedge or whatever you'd like to call that. Two ways to go with this. We can continue the bullish trend. This can be a pullback measured move and run 100% of that bearish move back up to the top. Now with a 3-to-1 split, this will be more like a move from like $300 and some change to like upper $400 area. Sure. 4 times 3 is about 1,200. This is about 1,160. That's fathomable. My charting is going to be dramatically changed on this. For some reason, when there's a split like that, it just gives me a cliff from the split. It doesn't give me the shorter time frames, but it will show me correctly on a daily chart. Long story short, we got two things factoring in here. We got the daily 200 period is resistance in this pattern. If this accumulates and breaks bullish, you can certainly write it bullish. If this breaks bearish and gets rejected by that 200, you can certainly write it bearish to the next retracement point. How do you find those? Pretty easy. Control candle right here matches this gap back here. You can see the range pretty clearly, and that would be a quick bear target, about $840. If it decides to break bearish and continue that, next control bar, 762, 761, somewhere in that area. Ideally, it goes bullish. This becomes a measured move. We run to the top of the channel. Either way, you're going to see a swing trade setup in this thing pretty quick, probably by tomorrow. And it will either be bullish or bearish. So I would probably sit on my hands and wait till that move shakes out tomorrow. Or if you can find the right credit spreads, you can actually enter a set of credit spreads on both sides of price here, where it's at, right in the center of that. Sell a call credit spread and a put debit spread, right? If you leverage them right and you run the range from today, the premium between those spreads, say you're running $5 wide spreads, if you can get $2.50 or more than $2.50 for each of those spreads and overlap the amount of delta in that trade, legging into an iron condor, you get a very mythical and very rare opportunity to find one, positive delta iron condor, meaning if you sell two spreads that are $5 wide, both call spreads and put spreads, and you exceed half of the premium in each of those legs, that overlap in premium becomes positive delta. So $2.50 for each spread would be neutral, be zero. Okay, it'd be balanced. So if you're looking at that, you end up with a situation where you have a zero delta trade, meaning zero risk. If your delta is positive, anything above $2.50, let's say you close both of those trades, you sell both of those spreads at $3, you get $1 or 50 cents of overlap in each direction. So you get a whole $1 of positive delta. You cannot lose. That can close blow through one set or the other set in either direction, and you're still going to take a profit from that. The idea is if you get into a positive delta iron condor, your risk is lower and lower and lower, or zero or negative. And if you happen to really catch a situation where it just continues to grind sideways and both of those credit spreads expire worthless, you keep all that premium. Just an idea. I don't know how many of you out there are into complex options trades like that, but this is certainly presenting one of those opportunities very possibly today. All right, I'm going to wrap it up with that. Just basically a recap of our 3 best movers from yesterday and Tesla today. Don't really have a whole lot else we can call out for swing trade setups today, but I think tomorrow we're going to have some really good ones coming into play as far as volume movers and better large cap opportunities for some bigger moves. In the meantime, penny stocks have been going nuts and scalping the crap out of those, and things have been good. Also, the futures, man, futures are great to trade on days like today if you know how to trade chop. All right, guys, I'm going to sign off. It's been a great build, and we'll get this out on YouTube and get it to as many folks as we can and share the news. See you guys next time.